Okay guys, I'm going to show you how to scalp the market.
Wait. Matron, take them away.
And a warm welcome to one and all. And if this is your first time here, I am the very burnt, scruffy trader. Just come back from holidays and yes, burnt to a crisp. True Brit, stand in front of the sun going, give me what you've got, you big sod. And apparently it did. So I'll do it again in about 6-7 weeks and see if I learn my lesson. I doubt it, I'm 52, I haven't learned it yet. But anyway, what are we learning today? Well, I'm hoping to show you how to use a combination of things to scalp a market, because that's what I like to do. I always use multiple confirmations, and that is for my triggers. I use multiple triggers. I use various different ways to get out. I don't look at a singular entity because that's fool's gold. You've got to be able to see the big picture, and indicators are exactly what they say they are. They're an indication of what may happen. But if you start combining them a little bit and looking at the big picture, as I say, you then have a better chance. So let's have a look, see what we're talking about here. So if I just look at the DAX, for example. Now, when I'm day trading, I'm looking mainly at an hourly chart. Slower market sometimes at 4, but I'll look at this first and I'll try and get a gauge of what I think is happening. Well, straight away, up, across, back up. So that's like a classic flag, if you like, and it's pushed up. We have a roadblock. Be very careful with your roadblocks. Look for pockets of air. Now, I can see the burst and I can see the stall. So what is this telling me? Well, it's telling me that I'm either going to be looking for a continuation, so it's going to be another pattern like this, up, consolidation, then move up, or it's a move back down. Okay, we've got 2 key points here. I think there's a fair bet this could move down. Why? Well, drive up, stop dead. If it's consolidating and move down, and if I want 10-15 pips, I've got a good opportunity. So that's the first thing that I'm looking at. So what else am I looking at? Well, I'm looking at the candles themselves. They're not increasing in volume, they're actually decreasing in volume. Think of a car on a motorway. If you see it's slowing down and there's an exit not far away, is it a reasonable assumption that this might be turning off that motorway? Hence it's slowing down. Another thing to look at. But then we're going to look at something that's called the RCI. Now the RCI here is quite a strange looking indicator. Okay, and if I just pop that back up a second, you'll be able to see. It's what's called rank correlation. In other words, it's looking for key turning points correlated with the market. And that's what these lines are. Now, its lines are very similar to that what you would see on an Ichimoku cloud, which is what it does. It's trying to look for key turning points, and that's what the Kumo twist and what have you is. So if we just thicken this up a little bit, and you can alter it to, as you can see, the open, high, close. Now I'm only interested in the close points, and we can see that it is moving really high. Now it is starting to bend over, and we can see that here, because the 26, which is the midline, is being up and it's pushed down. The 52 is already up, excessive, and now the fast line is catching. What we want is now the rollover, all right? And why? Because it is very high. All 3 of them are very high. So that's telling me that this can be running out of steam. And what else tells me it's running out of steam? Very small candles. Roadblock. So we got 1, 2, 3 things that can tell me this can push backwards, certainly for the short term. So what do we do now? take it to a 15-minute. What can we see? Well, I'm not really bothered too much about the longer lines, but I'm looking at the shorter line and it is rolling over. There is the move. Interesting. So what else can I do now before I move into the 5-minute chart? Well, I can put some markers in. So if I take a fib, I can see a move started here and it got as high as there. And if I'm targeting a 50% point, well, that's about here, just there. I've now got a marker that I can get to. So I've got an area it's bouncing off, a marker I think it'll push down to, and a rollover, adding to the confirmations. So now I'll just take it down to a 5-minute chart. Don't need this anymore. Just get rid of that. And I can start thinking about, can I get into this? Let's have a little look and see if we can. Because what's happening all the time is we're looking for stretch points. Now, if I just drop on that RC again, I'm going to show you something. All right. The stretch point is the 0 line, because it's either going to stretch up there or it's going to stretch down to there. So this is the area for your trigger in this instance. And it's working its way down to it. So what we've seen in the higher ones, it's up pushing down. And this, we want to see the momentum. And if it breaks through the 0, the stretch point is down to there. So that's how you hold your trade. And what you're looking for is, well, am I going to exit here or am I going to exit down here? Choice is your own. But how do we get in? All right, so I'm just going to remove that. So I like to work with a clean chart as well. Well, in this instance, again, we can do a couple of things. If you're a trend line lover, you can go, all right, I'm going to put a trend line on. You can see a point from there to there. And I'm going to wait for a break of the trend line. Simple. I don't like trend lines because I find them a little bit subjective. Right? You can put on a moving average and set that to, say, an 8. Okay. An 8, and you're looking for a break of the 8. So that will be here. Right? Or you can add an extra little bit of confirmation to it and do a candle count. 1, 2, 3, 4, 5. Look for the lowest point. Draw another little line. Just like so. Just get rid of this moving average. Just don't really need it. And that is your first entry point. And then you can trail the price because you've made a decision that you think it's going to come back on itself. So that's what we're going to do. All right. We're going to trail up the green candles and we're going to see if we can get into it based on the last 5. So 1, 2, 3, 4. Where we are? 1, 2, 3, 4, 5. So the lowest point is there. We can't trail up because of this. This has to come down. But if that one goes green, we'll pull the marker up. Hope that makes sense. So let me just drop a quick order in because that's what we're going to be doing. Just like so. So at the minute it is there. And we are looking to get to in and around this area. Okay, and that's it, guys. That's your trade set up, broken down all the way. Just using the charts, some basic structure points, which are the levels that I've already put in, and an RCI. Simple stuff. And it's all about mapping and understanding charts. And if you can do that, then you are halfway to success. So let me play this out and we'll see if it wins. Yes, no, and then I'll come back to you at the end. And why do I do it this way? Well, because I see plenty of other YouTube videos. They always use a rollback chart, saying I get in here and I get out there. Of course you did. This is slightly different. I'll show you the trade. What I'm going to do, I'll build it up in front of you and I will trade it in real time. And I can't be any fairer than that. So let's run it out. I'm going to go fill up my coffee cup because I can hear Winky banging around downstairs. So that might mean I get my dinner as well. And see how we get on. All right. And what you may see is some extra orders go in because you can also stage your orders, catch the oscillation as it moves against you. And if you don't understand that, read up on something called dollar averaging or pound averaging. It's a way I sort of limit risk and increase profit. Superb. Far better than risk reward. Risk reward's a waste of time. ROI makes you more money. Catch you soon. Okay guys, stopped out. Am I worried? Not really. So what's happened? Well, I made a choice, not an assumption. And if you keep an eye on Coffee with Scruff, we're going to discuss assumptions just a little bit. Because I genuinely think a lot of people look at the market that way. But I'll discuss that more with Coffee with Scruff. What I did here was I systematically broke down the chart just using basic stuff, and that's all you ever need. And it doesn't matter whether it's an Ichimoku cloud, whether it's a moving average, whether it's an RSI, stochastic, whatever. As long as you understand the basic principles, what you're looking for, because X does not mark the spot. Then what you do is you manage it. And that is your best friend, management. So what I did, I recognized the market as we saw at this point. We had a couple of points to get in, which was here. Cracked. Now, you could have done a time scalp. Now, a time scalp is just a period of time within a candle. So you could have said, right, first close below and then the next 5 minutes. And then you just exit at the end of there. Or you go to a predetermined target, which I set down here. And then just see what happens. But within them, you have to have checkpoints to get in and out. Now, what makes me consistent is I don't hang on for a prayer. Now, I could have thought, well, it's pretty close. It looks like it's going. Oh, no. I saw this one starting to go green. There's a lot of indecision, which means it can go either way. 50-50. I don't like 50-50. I want the edge in my favor. So how do you increase the edge at this point? Well, you're trapped within the trade, so you're committed. You take so much off. So that's what I did. So I took a chunk of the money off, made certain the stop was pulled into risk-free and a positive expectancy. In other words, I can't lose. And then wait to see what happens. And then I've made the right call because I watched this candle starting to struggle to move down. So I thought, right, I'll pull the stop down so it gets me a reasonable figure. If it moves up and takes me out, fine. I'd rather get taken out here than let it run the way it's going and taken out up here and get nothing. In other words, I don't like giving away all my profits. And if I so wish, who's to say I can't re-enter the market under these candles for it to come back down here, get some more profit. And why underneath and not above? Very simple. If the train is going that way, but I'm wanting the trade to go this way, which one do you want to be on? Well, you want to be on the train going this way. So if that leaves the station and leaves you behind, just let it run. Because you try and catch a moving train, rip your arm off. Simple as that. So there we go, guys. Quite a simple scalp, quite an easy way to look and trade the markets. And that's what I do every day. I just read, see what's available, check for a good entry point, and manage it. And when I'm paid, I'm done, finished. And I don't go back because I don't gamble. And I've seen that recently, even in my own group, the Scruffy Squad. It is wonderful to post up a huge bunch of trades that you've done. Too much, you know. If you're trading more than once or twice a day, you're putting yourself in front of the freight train. You can be lucky for a week, might even be lucky for a month, but to keep it going for years, it'll wipe you out. And it will, because you'll get too cocky and boom, gone. Once, twice a day, solid trade management, you'll be fine. And if you want to see it exactly how I do it, because I prefer GoldenEye as my trade of choice, come and find me in the Scruffy Squad. Very easy. All the details are in the description below, as is all my contact details and some useful links. You'll find my preferred broker down there, and also a 5% discount if you want to try a funded prop fund, which is the 5%ers. And again, you see me trade that all the time. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.